Yeah, guys. Monday market mapping. You know how we do. I think some people might have been scared since we didn't do the time that we normally do. But let's just find it. Clinton. One of these days, I need to put Clinton online. I know as he's busy there. He's one of the guys who. Let me see. He's one of the guys in my community that I know is like very active. And I know that you probably got some things there because he's a JPY man, and I was looking at something with the JPY actually, but let me do this. I've got the AI companion on, so I hope it's gonna do the things. Prof, I don't hear you. What is it? Me?
How's it, everybody? Can you
What
hear me?
what's going on? Because since I unmuted you, how it's been quiet. It's been quiet. Yeah. Um. But anyway, let's get into it. Yeah. Last week, look, no signal sent, but what was discussed as far as the moves are concerned, we moved in nicely. I think this week I'm in a much better headspace to go in with it. No, I'm seeing the wrong thing. Why am I? Yes, this is the right page. I'm like now, like,
Yep.
hey, isn't NFP this Friday? So, guys, is that week NFP Fridays, but also action packed with all of this. I don't know, Prof. Is there anything that stands out for you? Maybe you can start, then I can tell you what stands out for me.
Basically, it's the same. It's the same thing. It's the same thing over and over again. On CPI, of course, as we can see, they're predicting the numbers that I want to see. The CPI, year over year, they're forecasting for it to drop. And on the technicals, that's exactly how my technicals are like on AudioSD as well, which is a drop. And GDP on CAD, it's focused to drop, as in the focus is focused to drop, of course, on the month to month, and basically that is perfect because it also coincides with my USD CAD analysis and FOMC. Oh, FOMC. I'm still building a market consensus on that, so I'm not going to make any commentary. And then as for the dollar in general, just looking for the dollar to carry on being bullish. So NFP, I'm looking for things to carry on being bullish. So it might just whipsaw a little bit. It just might be, we might get a spike to the downside on NFP, but the overall direction should carry on being bullish as my technicals are, are, um, are structured. So basically for me, that's it on overall. I don't want to go too deep into it.
This week is just one of those weeks that, guys, if you can look at your economic calendar, it is action packed, and it's one of those week where even if you full margin, both ways, buy on one account, sell on one account, I feel like you'll overall be profitable this week because obviously the all the policy rates when they come out, they do shake the market quite a bit. FOMC, when that rate hits at night, I know we're gonna see crazy movements. I know the hype is around NFP, mainly amongst retail traders, but I know that the FOMC tends to shake quite a bit. So it's gonna be quite an interesting week to see because every all the different news are projected to throw different currencies to different places. So we don't know what we can, like this can push GBP USD up, and then the next day when this news it pushes it down. So I know,
Yeah.
like I'm saying that it's just one of those. It's just one of those crazy week where, for me, if you don't full margin, you know, especially with the news releases, play it a bit safe this week. But yeah, there are a couple of things that I am looking at, also end of the year, other things like with trading. um you start to see cycles. So first two quarters are done, and the third quarter tends to be the most aggressive, for me. It tends to be the most aggressive, and then you find once then, the third quarter has had all its aggression, then the rest of the year is pretty much chilled again. But that's just me. 11 years in the market, so there's certain patterns that you pick up. It's like, I was telling somebody once that USD ZAR, a lot of times in January it goes down, and I have my own speculations as to why it goes down, especially if you take away what
Mm.
retail forex is and actually understand that forex, with Apple goes to a Deutsche Bank, a UBS, and those are institutional banks, Deutsche Bank, UBS, Citibank, whatever bank, right? And says, hey, we sold like $50 million worth of stock in South Africa, but then it's rands. And what is the rate that you're gonna give us? It's the same thing if you travel. Obviously, if you've ever traveled internationally, you'll go there and see, okay, who has the best rates, because not all the banks are moving like with the exact same rates. And we also see this in forex, that not all brokers will have the to the last number the same. They'll differ here and there because, again, it's an offer. So that's what they do, and thus once they get a bank with a good rate, that's when that bank has to commit to that rate. That's why you have things like commitment of trader report. I don't remember looking at that with you guys, but if you're really trying to get into it, do research on the commitment of traders report. There's a whole website there. I know, Prof, you know something about that, correct?
Yes, 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 yes. In
So,
fact,
so, I mean, there they put all the long positions, short positions, and stuff like that, and that's then the institutional guys, the big banks, then they have obligations to fulfill to a company like Apple, because they said we'll give Apple, for every 18 rand 20 that they give us, we'll give them $1. And you find that maybe, the USD ZAR rate is pretty much at like 18.50, and they were like 18.20. So now they go and drive the price up or drive the price down according to what they need. But I don't want to stick too much on those concepts, because you'll end up being so obsessed. Like, I'm also, like, things like the market maker method and stuff like that. I get them, but I don't try fill my head fill my head up with those things too much, because I'm just trying to I'm trying to look at the market and what's happening now, and don't be afraid of, oh, there's a market maker and they're gonna do a stop hunt and whatnot. Look, all those things are there. I won't deny those things being there. I don't know. I'm hearing people saying my mic is sounding far. If there's any, I don't know, is it sounding like that to everyone? Sounding far.
to me, it's a little low, but it's
Okay.
not too low. So I'm not sure about their devices, but I can hear you because you're on my headphones.
Okay. Okay. Um. All right. I just changed my mic levels, guys. I
Yes,
hope.
that's actually louder. Now you
Oh,
louder.
okay. No, as long as I'm louder. But anyway, Prof, this is actually your week to get started with it. Are you
Yes,
ready?
yes,
Are you
yes. Let's go.
ready?
Let's go.
There.
Boom. Okay. How's it, guys? Hope everybody's doing good. Hope everybody's doing good. And this week, basically, my analysis, it won't be too long, simply because of one thing. We are done with the consolidative period of this year, right? For those that have watched my ground up breakdowns that I've done a couple months ago on YouTube, I've been saying that odd USD is overall going to be bearish this year. So as it kept pushing up, I wasn't really taking it too seriously, but of course I was trying my best to capitalize off of the push up that it's been doing this month, these couple of months. But the overall direction this year, it just should be bearish, just judging off of year to year, how last year was, the year before that. USD CAD bullish, and we'll get to gold. So why I won't spend too long on this analysis is simply because look at the weekly, guys. And for those who want to know, this moving average is just a 90-day moving average. 30 days times 3 is 90. So every 3 months. It's just something I also just touch on in my mentorship. It's a very, very key moving average for me, right, in terms of overall direction. But yeah, just look at this chart, guys. Just look at it. This chart is moving down just by looking at this chart. Don't overthink it. Don't think a lot. Yes, I know us SMC guys tend to just want these sniper entries and all of those things, but I'd like to think that I'm not purely an SMC guy. I'm a lazy SMC guy because I do use a lot of price action when it comes to the direction of the market, and SMC mainly for entry points, right? So with that said, look at this huge engulfing we had right here. So let me take up my annotation tool, and then you'll see why I'm what I'm trying to say. Look at this huge engulfing right here, which was a week before last week, right? Ever since that engulfing, the market has pushed down with force, right? 2 weeks, just 2 weeks off a drop, managed to engulf 1, 2, 3, 4, 5, 6, 7, 8, 9 just 2 weeks of candlesticks managed to engulf 9 weeks. That alone should say something to you guys. That alone should say something to you guys. Manoko, please stop drawing on the chart because yes, we can see it. But yeah, with that said, guys, the momentum is to the downside. It is to the downside and it has kicked in. So now we're basically in a trending market, right? So whatever you do, just keep looking to sell this pair. So now go to the H4, right? Just to give you guys a nice glimpse of the zones that you should have. So I'll just zoom out. And as we said, I think a week before last week, that this consolidation right here, we are out of it, guys. That's been happening for the longest time of this year, right? So we're out of it now. And this push up was basically what we call manipulation. So as you know, there's accumulation, manipulation, and distribution, right? So we accumulated, which is consolidation, right? And then we manipulated everybody because everybody's thinking now we broke out of this wedge and we're buying. And all of a sudden now we're dropping so hard. This is the distribution phase. So the market should keep distributing in this direction. And now the zones that you guys should have in mind is the key levels. I'd say this level of support right here, which is now turned into resistance, keep your eyes on that, right? Because if that zone is violated to the upside, then the markets can easily want to push up to here, to this zone right here. So these two zones are very crucial because if this zone is not violated right here, if this zone is not violated, then the market will carry on pushing down. because that's what we're looking for, right? We're looking to keep taking this market down for it to form lower lows up until at least, this zone right here, all the way down here. That's what we're looking at. And if we look at that on the daily, where is it? All the way down here. And if you could just drag that, push it to the side, as you can see, it's a strong level that we have been playing around in, right? So just for those that don't know what I'm speaking about, as you can see, the market kept bouncing at this level and then pushed up, came back down, bounced at this level, pushed up. So we're looking for it to come back down to that level. Hence why we just got to be looking for sells in this market. So as for points of interest, I hope you guys saw those H4 zones that I marked right here. And my SMC guys, in those zones, you can look for a change of characters. As you can see in this zone, there's a nice fair value gap right here that we could sell from. And then if the market pushes all the way up, then we know that this order block right here, which is this little bullish candle right there, that we can also sell from, right? So those are lovely points of interest that we can look at. Now I'll move to USD CAD, and it's also self-explanatory. I mean, just by me opening this chart, it's doing the opposite of what odd USD is doing. It's pushing all the way up. And as you can see, the trend is up with the moving average. And as you can see, people are now anticipating this major breakout, right? People are now anticipating this major breakout so that we can chase this high right here, right? That's what people are anticipating for. So expect the market, yes, to retrace a bit. Expect the market to retrace a bit, as you know, right? Or maybe some whipsawing a little bit in this range right here. And it explains why we have the market right here at the top of this price action at the week of NFP. So do you see why I say the market might just whipsaw? Because now we add a resistance on an uptrend on NFP week. So now a lot of people might be caught on both sides, because there might be early buyers and early sellers, because people might want to sell back into this level, but then the price won't probably want to come back to that level and just end right there and then push up, seeing that we have a broken resistance right there. So just be careful this week, guys, as per that. But we are definitely looking to buy this pair. Now, let me go to the H4 and show you the zones that I'm talking about. So as you can see, this was the highest of that consolidation, right? So that we've been talking about on Monday market mapping. And this is the lowest right here. And we are now done with this range. So now a lot of people are going to want to buy, but it might be a little too early. So all you need to look for now is key levels on the hourly time frame, seeing that we're on a resistance, right? And look at this beautiful push to the upside. So on the hourly time frame, everything on your higher low should be considered as entry points. So when the market gets to a higher low, Samsung, can you please stop drawing on the charts? Samsung SM. So when the market gets to a higher low, just look to take it back up, right? So look for change of character to the upside, look for engulfings and stuff like that, right? And yeah, basically that's the whole consensus on USD CAD, right? We're not really looking for a major sell-off into these levels, right? Why? Because we know that our weekly is very much bullish. So the momentum is to the upside. And we'll end it off on gold, which is some of you guys' favorite pairs. As you guys know that I've been very bearish on gold, and believe it or not, I still am, right? Why? It's because we're still not make sure. We're still not make sure when it comes to gold. As you can see, every time a high is broken, and this is the weekly, by the way, market retraces. This high was broken, the market's retracing, right? And I'm not sure if you guys have seen on your social medias that everyone is selling gold. And I don't blame them, because when you look at the weekly, gold should sell to at least this point right here. It should at least sell to that point right there, at least. And if that point is broken, then we already know, guys. We're going to that target that I was speaking about a couple of weeks back on Monday market mapping, right? Before now we get the overall push heading to next year and stuff like that. So these these zones right there are very, very crucial. So you can just easily draw a trend line like this and watch this zone right here, whether you're SMC or your price action, right? So for now, what we need to be looking for on gold is more sales, because the market is forming what? Lower lows. And every time it breaks a key level, it comes back to that key level, it filled this fair value gap, and it's pushing down. So now where are we looking for gold to go? We're looking for gold to break this low right here, right? As in, it can play around, do whatever it wants to do, but indeed it needs to break that low if the bears will keep going. And as you can see, guys, the bears have no reason to not keep going. At least you can now start looking for major pullbacks when the market has reached this fair value gap right there. But that major pullback will probably be up to here. Why? Because we still have another fair value gap that is resting at this support, right? And that's a key level of support as well, seeing how many times the market. So with that said, gold is still very much bearish. Look for sales at your highs, your higher, what you call your lower highs, I mean. And then, yeah, guys, with that said, basically, I don't think we'll have too much of a hard time making money in the next coming months, because the markets are very clear. As you can see on the weekly time frames, the markets are very clear. We're getting into our trending phase now. So yeah, just a quick recap. Look for sales on odd USD, look for buys on USD CAD, and look for sales on gold. So yeah, that's basically it on my side.
Awesome, awesome. What are those two lions I'm seeing at the bottom of your screen? That red and blue lion there.
Which lines were you talking about?
You have some lions there next to your MetaTrader 4 on your taskbar. Anyway,
Oh,
they look like
I don't know. I
platforms.
don't know.
Oh, okay. Okay, guys. I'm just gonna look at GBP USD and Euro JPY now, because predominantly those are the things that I do trade. I think I just wanna add in a New Zealand CAD as we go along. I'm just still trying to pick up on the sort of behavior. USDs are, this one is so confused because we broke some levels. I'm on a daily chart. I don't know why I thought it was on a weekly chart. But yeah, I still expect this overall this year to go down. And like I said, that normally in January we do see a bit of a downtrend from time to time. But yeah, but anyway, GBP USD, very interesting what we've seen, because as we said that we saw it about 3 weeks ago, breaking yearly highs over there, and I'm just gonna take the close price, and I'm not gonna take the this week price over here. And as you can see, when you reach there, we immediately got rejected, but we're breaking out of that zone. And if we can just look on the daily chart now, because this was the year's high, we broke it, and we seeing some price action right now, where again all the fundamentals right now do make it a little bit of a tricky market to be in. But I'm expecting to continue to see a push to the upside, because again on the monthly we are seeing that. And it would be interesting just to see how the market closes, if they will close above again, as I mentioned, this yearly high. I'll mark the other, or the prior high. I'll just mark the other high there as a place where, if we don't break it clearly, then I'll continue to look for moves to the downside. I just want to bring in my Fibonacci's over there, and it's amazing to see that in with my Fibonacci's, this comes right back to the 50% zone. So we want to see if we break the 50% zone. And if we do, I'll continue to be a buyer to the upside, making my weekly targets I just want to draw them there for you, making my weekly targets 129,600, number one, and then number two would be basically 1.3. 1.3. I just make it a round number, 1.3. But if we do, then if we don't break the 50% retracement as I'd look there, then I will look for moves to the downside. I will look, and this 50% retracement, you can just see these were places where the market held quite well last week. So just above this week's high, that's when you can look for that. Remember, trading, you don't predict the market, but rather you react to what the market is doing. So whatever price action is gonna say there. Another thing is they did again break the 127 zone. So that is an indication that maybe they want to go to the downside. But again, like I said, when we're looking at this, they are at a structural point, their key structural point. So I want to see how the daily candle is going to finish, and also how it's going to go. But coming to tomorrow, I'll most likely, let me just put it like this. Okay, that's not there. Basically, tomorrow morning, this is a 13 moving average on a 4-hour chart. Tomorrow morning at 7 o'clock, if we are trading above the 13 moving average, then I will be a buyer from tomorrow. But if we are trading below the 13 moving average, then I will be a seller. So it's a little bit of a tricky one, but I do believe more in the upside movement, and that's why I think I'm gonna be more of a buyer tomorrow. Again, like I said, I'll just confirm with the moving average, and also on the 8 o'clock candle, which will be at 7 o'clock, and then I'll decide whether I'm buying or selling. And then this one over here, Euro JPY. Euro JPY is as we were looking at last week. Remember, I spoke about those sales last week, and they dropped way lower. I'm actually upset that I didn't trade last week, but they dropped way lower than I actually anticipated. And what I'm looking at here is a continuation to the downside, right? Is a continuation to the downside, because I just want to bring it here and show you that let me just clear my charts here, and show you that what just happened is they violated a high. Remember, like I said, the 32-year high, they violated it there. And as Prof always says, that when we break a high, we can expect a pullback. I'm correct by saying that, Prof?
Yes, 100%.
Yes. So that is the pullback that I'm expecting, and this is something we saw last week. Sean, please don't be drawing. Thank you. And that is something like I said, even last week I was looking at that sell. So I am still waiting for moves to the downside. But before we get into it, I think we maybe see a bit of a retracement, especially because there was a big sell movement. And when I bring in the Fibonacci's, we can see how we were really holding at that level. Let me just move it just a bit. We were really holding at that level, and I want to come down to a 1-hour chart. We've been holding at that level from last week. Today we really didn't want to break it. So there is a pattern that's called an AB equals CD pattern. When I was looking at this, I was remembering when one was still learning how to trade and stuff like that. And I don't complicate my life anymore with those technicals and godly patterns and all of that. But an AB equals CD pattern, right? Can I just bring annotation tool so that you understand. So we'll call this A, right, and B, which was our impulse leg. And then what happens? The theory of an AB equals CD pattern is the AB length needs to be equal to a CD, right? So the impulse leg is gonna be the same as or the second leg is gonna be the same, right? Gosh, that is an ugly D. The impulse leg is gonna be the same length as or the same movement as the second move, right? So you guys can just check that out. AB equals CD pattern, and we can see that market held over here. And please, Bongi, don't be drawing. Please, please, please. Yes. Yes, we can see that it comes in over here. So the move that I'm expecting, actually, the move that I'm expecting, can I just remove the CDs and all of that, right? The move that I'm expecting is for the market to buy up, right? So I am gonna be a buyer from tomorrow, should price action show me that, especially in the morning. Buyer up to your levels of 169. Yes, I say 169 flat. And then what I'll expect to do after that, should price action again prompt us to go to the downside, is then be a seller down to this low again, and possibly even lower, using the theory of markets are normally going to retrace after breaking a major high or low. So can I just come back to the 4-hour chart so that we can look at possible zones where we can see a pullback, right? So I expect to see this market buy up, buy up until 169 flat, and then we can continue to see it moving to the downside of a level of around, can I bring that there, of a level of around 162 900. So I'd rather put a flat 163 there. And if we can look left, I'm just trying to see, you see how market has treated this point, because 1 2 3 4 5, I won't count that one, although we can see that there was some price action here, right? But the one two the all these different times that the market reached here. So I am expecting to see that move this week play out like that again. I don't like this sort of behavior, because it is kind of trying to predict the market. But just with seeing basic chart patterns, that's what I'm looking at. So this is more of a chart pattern of a pattern trader sort of outlook. But those things do work, and thus I'm expecting that pullback to around there again, because this pullback is expected. If I can just bring a clean chart, this pullback is expected because we had 3 weeks. Okay, let me just allow you, because we had 3 weeks of straight sells, and we saw that last week's sell was quite an aggressive one. So you know that the banks and all of that, they can't just make something move in a straight line. So that's why I'm expecting this pullback around about we were here around about to the 169 region. So I'm gonna be a buyer up until there, and then going from there, then I'll just stay out the market, want to see what they're gonna do, and that is what I'm looking at for. That is what I'm looking for this week. More of my confident trade here on Euro JPY, the GBP USD one. I just still want to see where we're moving according to this moving average tomorrow, and I'll know that whether I'm a buyer or seller to the levels that we've discussed. All right, I see a JA here. I don't even know what JA.
Japanese.
Yeah, I don't know why it's thinking I'm speaking Japanese. Guys, do I sound that funny, guys? That like I sound like I'm speaking Japanese. But yes, guys. That's it for this week. That's what I'm looking at. So I really want to see what that's gonna do. But just to look at the why again, I'll say I'm looking at that GBP USD buy is if we're looking at the GBP LFX alone, the pound index alone. I'm on Light Finance right now. LFX alone, we can see this hammer here, and it's really holding this price, right? It's really holding this price. So the pound is a pair. The pound alone is a pair that I'm looking at buying. So with me saying that, you can look at like GBP CAD buys because this also coincides with what Prof has been saying. I just want to look at that. Prof, like with Prof telling us that we can look at the USD CAD buys. So even GBP CAD is like one that I continue to see some more buys come in it, because we can see how the market is reacting there. And let me just bring in the Fibonacci tools over here, and we can possibly see USD CAD buying all the way to 178 800 800. You know, I like round numbers. And then the second profit target zone would be 179 300. 179 300. So that's also something that you can look at this week, is a GBP CAD buy, seeing that especially on the dollar front, the dollar is quite a dominant currency. So the moves that come out of dollar news, you know, they really move. Unlike CAD, you know, CAD, like I was looking at the CAD CPI. The CAD CPI was so weak, you know. You get more. Yeah, you get more excitement from a PPI, from the US dollar. So that's why I'd rather put in my buys on a GBP CAD, um, on a GBP CAD, than I would on a GBP USD. GBP USD, I'd be doing it because it is my comfort currency pair. But theoretically, a GBP CAD is something that you'd be more interested in buying this week. And yeah, so guys, also don't forget the LFX Light Finance. Again, like I said, it's very nice. It's very nice just to see what overall currencies are doing. Because, for example, also if we can look at the euro over here, they are moving down. They did break a resistance point, but I do see them bringing in buys just a little bit later, just not now. A little bit later, bringing us buys. I think we should have another week or two sell off with the euro. And I think next Monday market mapping, what we'll do is just have a look at the indexes, so that we know how to prepare for the new month. I know, guys, we're all excited for like the NFPs and what, but it's to always remember that trading is more than just a 30 seconds of or 1 minute of move or 2 minutes of move. Trading is much more than that. So I know the NFPs and the CPIs and the PPIs and all the eyes can be exciting, you know, for the time being. It's quick money and all of that, and hey, but guys, real trading is taking away all that hype and just looking at what's happening on a week to week basis outside of all the 30 minutes of technicals. It's nicer to look at what the technical, I mean, the fundamentals are doing over the long term, because you can look at the overall fundamentals and see currency going in a particular direction. But sometimes what we tend to do as people is take like one or two events and say that they're gonna move, and that's when we start getting, as Prof said, whipsaw. We saw it with the previous NFP, that it went down and then it went up, and then there's that sort of behavior
Mm.
going in, and that's because, like I said, that we can't really base things off of what one release is gonna say, especially if we're gonna be fundamental. Yeah, a couple of releases, and when you put together PPI, CPI, NFP, all of those things together, and you see that, look, all the numbers have been coming out bad, then you can know that, okay, this currency is just going to be performing overall bad. But if it's like a good
Mm.
PPI and then a good NFP and what and what and what, I'd rather rely on what's this on the technical aspects. But yeah, guys,
Mm.
Monday market mapping, guys, exciting things are coming. Know that there's a prime club that's coming up. There's other phenomenal traders
Yep.
that we're trying to collaborate with and really knock the ball out the park. Possibly even come through every day, have somebody new show you something new every day. Because the nice thing, and this is what I tell guys that are part of my mentorship group, and that's why I'm always recommending like other stuff outside of me. It's because, again, with trading, it really goes down a lot to popularity, not popularity, personality, right? And that's
Mm.
why you find Prof is very comfortable with SMC sort of concepts. I know you're not an SMC trader like through and through, but you're very
Mm.
comfortable with the concepts that you have, and I'm comfortable with the concepts that I have, because our
Mm.
personalities are different. So that's another thing that we're just trying to do here, is to bring different people with different sort of personalities, and you can start resonating with them more. And that's why I'm even like, hey, Clinton, hey, I've never been broke since Monday market mapping started. That is inspirational, bro. I'm loving this.
Thanks, thanks. Eish.
Shout out, bro. Shout out. I really appreciate that comment. But yeah, like we're saying, that just bring in different people so that different personalities, you can align with them, and we can do it. Because guys, we need to knock the ball out the park, each and every one of us here. Just do amazing stuff, and that's why we do it each and every week. You see, comments like this is the reason why, yes, once or twice we may not be there, but this is the reason, guys. But shout out, happy trading. Any updates, we just send them in the Telegram group. And yeah, take care, guys.
Shout out.
Shout out.